What if you could find a way, a single stock maybe, to get direct, powerful exposure to this rumored Ethereum supercycle? And what if it was potentially trading at a discount? Today, we're diving deep into Bitmine Immersion Technologies. Ticker is BMNR. Now, this company has rapidly become the world's leading Ethereum treasury. But here's the puzzle, right? Is BMNR the next MicroStrategy, a generational investment? Or is it just a super volatile bet kind of fueled by market hype? We've gone through the articles, the research, company reports, everything we could find to really unpack BMNR. As of our data cutoff, September 15th, 2025, the stock closed at $55.09 per share. Our mission here is simple: give you a shortcut, a way to get truly well informed about this pretty fascinating and frankly rapidly evolving company. And hey, if you find this kind of deep data-driven analysis valuable, please do us a favor, like this video and subscribe to the Stock Analytics AI YouTube channel. For our members, it's just $4.99 a month. You get priority deep dives on tickers you request. Plus, we're covering all the S&P 500 stocks over the next few months. So lots of content coming.
Want a one-off deep dive on a stock you care about? Just drop us a super thanks. Okay, let's get into it. Let's begin our deep dive with part 1, the foundation business, management, and financials. We'll kick things off with chapter 1, business analysis. Okay, so the first thing, maybe the most important thing to grasp about Bitmine Immersion Technologies is just how radically they changed. In mid-2025, they did a complete 180. They went from being a Bitcoin mining company using immersion cooling, hence the name, to becoming a digital asset treasury, a debt company, that old mining business. It's basically a footnote now, financially insignificant. Just forget about it.
That's a massive pivot. I mean, fundamentally changing the entire business like that. What does your research say about the core risks involved in such a sudden shift, especially into something as wild as digital assets?
Yeah, that's the million-dollar question, isn't it?
Yeah.
And it really leads straight into their core strategy, which is built on what they call a reflexive model.
Yeah.
So BMNR raises money, mostly through selling stock, sometimes debt, and then they use that cash to buy and hold Ethereum. ETH is their main treasury asset. Think of it like this financial flywheel, right? The stock price goes up, which lets them raise more money, maybe on better terms. Then they use that money to buy more ETH. More ETH means a higher net asset value, or NAV, per share. That boosts confidence, pushes the stock price higher. You see the cycle?
Right, a virtuous cycle when ETH is rising and the market's hot. But, and this is really key for you listening, that same loop works in reverse. If ETH drops, or the market sours on BMNR stock, the NAV falls, sentiment turns negative, the stock drops, making it harder and more dilutive to raise capital to buy ETH. It can become a vicious cycle, accelerating the downside. It's critical to understand that reflexivity cuts both ways.
Exactly. It's powerful, but potentially dangerous. Now, beyond just stacking ETH, they do have a sort of secondary strategy. They call it their moonshot approach. They allocate a small bit of their capital, like a few percent, to strategic investments in the wider crypto world.
Yeah.
For example, they put $20 million into a company called 8Co Holdings, ticker ORBS. 8Co is building up a WorldCoin treasury. So it's a small diversification of debt on another part of the ecosystem.
Okay, so for an investor looking at BMNR, what's the actual product they're buying?
Good question. The product is basically liquid, publicly traded exposure to a big growing pile of Ethereum managed professionally. It lets you invest in ETH without needing to worry about, wallets, private keys, self-custody, all that technical stuff. And their market position, as of mid-September 2025, it's pretty clear-cut. They are the #1 Ethereum treasury globally, full stop. And the #2 largest crypto treasury overall, only behind MicroStrategy and its Bitcoin holdings. BMNR holds over 2.151 million ETH. That's a huge amount.
And the chairman, Tom Lee, the guy who really drove this pivot, he makes a pretty strong case for why BMNR is, in his view, a better way to get ETH exposure than just buying ETH directly on an exchange. He talks about accretive growth, using corporate finance tools, essentially issuing shares when the stock trades above NAV to actually increase the NAV per existing share.
Right, which is something you can't do just holding ETH yourself.
Exactly. Then there's the plan for yield generation. They intend to stake their vast ETH holdings, which could generate significant recurring revenue paid in ETH. Plus, that strategic flexibility from the moonshot investments adds another potential layer of value.
And maybe most importantly for some investors, it's all wrapped up in a regulated liquid stock. You can buy and sell it easily through your regular brokerage account. That offers accessibility and, theoretically, security that attracts institutions.
Okay, let's widen the lens a bit and look at the industry analysis. BMNR is playing in this new but really fast-growing digital asset treasury space. What's driving it? Well, increasing institutional adoption of crypto, for one.
Yeah.
And this whole idea of the financialization of crypto, basically plugging digital assets into the traditional finance plumbing. Ethereum seems to be the main venue for a lot of that activity. Plus, there's this narrative around a future decentralized token economy, maybe powered by AI, which proponents think will massively increase ETH's utility and value. And you absolutely cannot ignore the regulatory side. That's been a huge factor. The Genius Act in July 2025, providing federal rules for stablecoins, was a big step. Even though BMNR holds ETH, not stablecoins primarily, clear rules for stablecoins make the whole Ethereum ecosystem feel safer, more predictable for big money. That indirectly helps ETH.
Yeah, good point. And there's this ongoing trend, this push to give the CFTC more authority over spot crypto markets, especially for assets like Ethereum that aren't clearly securities. If that happens, it's seen as a major de-risking event. Could open the floodgates for more institutional cash.
So who are they competing against? You mentioned MicroStrategy.
Right, MicroStrategy is the obvious conceptual peer, the pioneer with Bitcoin. In the ETH treasury space specifically, there are others like SharpLink Gaming and a planned company called the Ether Machine. But honestly, BMNR's main differentiator right now is just sheer scale and speed. They move so fast, bought so much ETH, they built this huge first-mover advantage.
And that scale becomes a barrier to entry, doesn't it? It's not easy to replicate. You need incredible access to capital markets. You mentioned BMNR trades $2 billion a day on average. That's massive liquidity.
Exactly. You need that liquidity machine. Plus, you need credibility. You need narrative control. And that's where Chairman Tom Lee comes in again. His reputation matters.
So scale, access to capital, and leadership credibility are the main barriers.
Yeah, which leads nicely into their competitive advantages. First, brand strength.
Right.
BMNR's brand is heavily tied to Tom Lee. People know him from JP Morgan, from Fundstrat. He's seen as a serious data-driven voice on crypto, even when he's contrarian. His chairman's message videos help build that direct connection.
Then the economies of scale we talked about. Being huge might mean getting better prices when they buy ETH, maybe lower borrowing costs down the line if they use debt, and potentially real influence in the Ethereum ecosystem itself through things like staking and governance participation. That's a long-term strategic plus.
Definitely. And there's a subtle network effect, too.
Yeah.
Stock's high liquidity attracts more traders, more institutions, which makes it even more liquid, more attractive. It sort of feeds itself.
So it really boils down to three things that work together: the massive ETH holdings, Tom Lee's leadership and vision, and the BMNR stock itself as this efficient capital-raising engine.
Okay, let's shift focus now. Let's move to Chapter 2, Management Evaluation. Who is actually steering this ship?
Well, the central figure, no question, is Chairman Tom Lee. He came in mid-2025 and immediately pivoted the company to the ETH treasury model. We've mentioned his background, JP Morgan, co-founder of Fundstrat. He brings a lot of Wall Street and crypto analysis credibility.
And it's worth repeating, for a company structured like BMNR, management's key skill isn't running factories or selling widgets, it's strategic capital allocation. It's navigating capital markets, it's timing ETH purchases, it's managing that reflexive loop we discussed. That's their core competency. Right. And providing the day-to-day operational continuity, you've got Jonathan Bates as CEO, Raymond Moe as CFO, and Eric Nelson as president. These guys came from the legacy mining business, and they all signed new long-term contracts recently, suggesting stability there. A really interesting addition came in August 2025. David Sharbut joined the board. Now, Tom Lee made a point of highlighting Sharbut's 17 years on the board of American Tower, AMT.
Ah, drawing a parallel. American Tower provides critical infrastructure cell towers that generate yield. Lee is framing ETH treasuries, and by extension BMNR, as similar vital digital infrastructure. That's a narrative aimed squarely at attracting conservative, long-term institutional money. Very strategic.
Definitely feels like part of a plan. In terms of communication, they're pretty active. Frequent press releases detailing their ETH holdings and asset value updates. And Tom Lee's Chairman's Message video series is their main channel for getting the strategic vision out there. We haven't seen any reports of ethical issues with management.
Okay, how are they allocating capital?
Priority number one, overwhelmingly, is buying more Ethereum. That's the core mission. Then you have the moonshot stuff, like that $20 million investment in 8Co, or BS. The idea there is partly ecosystem support, maybe generating some extra value on the side, but it absolutely adds a different kind of execution risk in the much smaller, arguably much riskier altcoin treasury space.
What about the share buyback? You mentioned a $1 billion program authorized in July 2025. Seems contradictory if they're constantly issuing shares to buy ETH.
It does seem counterintuitive at first, yeah. But it's really a sophisticated defensive move. It gives them the option, the firepower, to step in and buy back their own stock if it trades at a big enough discount to the net asset value, the NAV.
So it's accretive in that scenario. Buying back shares below NAV increases the NAV per share for everyone who remains. Plus, it signals the board thinks the stock is undervalued, a confidence signal.
Exactly. And this leads to how you measure their success. Forget traditional metrics like return on invested capital, ROIC. The legacy business lost money, so that's meaningless. The only metric that really matters for BMNR management is growth in net asset value, NAV, per share. Their job is to raise capital and deploy it in a way that consistently increases that number over time. That means trying to issue shares only when the stock price is above NAV.
Makes sense. The goal is NAV accretion per share. Clear focus.
All right, let's get into the numbers. Chapter 3, financial analysis. But first, a really crucial warning here. BMNR changed so fast, so dramatically, that its official SEC filings, like the annual 10K for 2024 or the quarterly 10Q from May 2025, they're basically ancient history. They tell you almost nothing about the company's current financial position or its massive asset base. So our analysis has to prioritize the current unaudited data the company puts out in its press releases, specifically up to our September 15th, 2025 cutoff.
Understood. Old financials are irrelevant. Focus on the current asset snapshot.
Okay, key metrics as of September 15th, 2025. Market cap, $9.56 billion. Huge number. Now, just for contrast, look at the legacy business numbers over the trailing 12 months. Revenue, only $5.45 million. Net income, negative $6.53 million loss. Free cash flow, a tiny $1.57 million. These legacy numbers are pocket change compared to the market cap. The old business was deeply unprofitable. It just highlights the complete transformation.
Right. And metrics like the old debt-to-equity ratio, 1.87, or the current ratio, 0.41, are equally obsolete. They reflect a business that doesn't exist anymore in practical terms. The critical piece for financial stability now is what they reported recently, $569 million in unencumbered cash as of September 14th. That's massive liquidity for their new model. And, as expected for this strategy, no dividend payments.
Okay, so how do you value a company like this? This brings us to valuation analysis. And straight away, traditional methods are out the window. Price to earnings ratio. It's negative because of those legacy losses. Discounted cash flow. DCF relies on predicting future operational cash flows, which BMNR's core treasury model doesn't really generate in a traditional sense. It's just not the right tool.
So this is where investors need to shift their thinking, right? If the usual methods don't work, how do you determine what BMNR is fundamentally worth? The answer has to be the net asset value NAV model. You look at what the company actually owns, subtract what it owes, and that's the intrinsic value of the enterprise. Divide by the number of shares, and you get a value per share. It's a balance sheet approach.
Exactly. It's the most direct way to see what you're actually buying. Let's walk through a quick calculation using those September 14th numbers. It's pretty straightforward. First, the big one, Ethereum holdings. They reported 2,151,676 ETH. Let's use an ETH price around that time of 4,632. That's almost $10 billion right there. 9,906,313,312.
Okay, nearly $10 billion in ETH. What else?
They still hold some Bitcoin from the old days. 192 BTC. Bitcoin was around $115,000 then, so that's another $22 million. $22,080,000. Then add that big cash pile. $569 million. And don't forget the moonshot investments, primarily that ECO stake. Let's estimate its value around $214 million. $214 million based on available info.
Okay, adding those up, ETH, BTC, cash, moonshots.
You get a total asset value of roughly $10.77 billion. $10,772,393,312. Now subtract liabilities. These are harder to pin down precisely from press releases, but based on past filings and recent debt levels, let's estimate them low, maybe around $5.76 billion. $10,766,003,312.
Last step. Divide by the number of shares outstanding, which they reported as 173.5 million, 173,500,000. Do the math. And you land at an estimated NAV per share of around $62.05.
$60.05 per share in underlying assets. Yeah. Now, obviously, big caveats here. This depends heavily on the accuracy of their reported holdings, the exact market prices of ETH and BTC at that snapshot moment, and the shares outstanding figure, which we know changes frequently because they keep issuing stock. But it gives us a solid benchmark.
A very useful benchmark. It anchors the valuation conversation to tangible assets.
Okay, let's change gears. We're moving into part 2. The market and the future sentiment, ownership, risk, and conclusion. starting with Chapter 4, Market Sentiment. We have this NAV picture around $62 per share. How is the market actually feeling about BMNR right now? Well, Wall Street analyst coverage, it's still pretty new, still developing, but the ones who do cover are uniformly positive. 100% buy rating across the board. Their average 12-month price target, $60.
That's interesting. $60 target versus our calculated NAV of about $62.05. They're very close. It really suggests the analysts are primarily valuing BMNR based on the assets it holds right now. Maybe they aren't giving much, if any, premium yet for Tom Lee's strategic abilities or the potential staking yield or that reflexive model's upside potential. It seems like a very asset-focused valuation from the street so far.
That's a great point. It feels like the market quickly priced in the fact of the asset accumulation, but maybe not the implications of the strategy yet. And the overall sentiment, it's been overwhelmingly positive recently. Just look at the stock chart. It went from the 52-week low of $1.93 to over $55. That climb was fueled by just a relentless stream of positive news. Like September 15th, they announced holdings topped $10.8 billion. ETH over 2.151 million. Huge numbers. September 13th, they crossed the 2 million ETH mark. Stock jumped 15% that day. September 8th, they announced that $20 million moonshot investment in 8Co, or RPS. And September 6th, this got attention. Kathy Wood's ARK Invest bought another $4.4 million worth of BMNR stock. That's a big endorsement.
ARK buying definitely adds fuel to the fire, confirms the narrative for many. What about indicators like short interest? Anyone betting heavily against it?
Not really, no. Short interest is pretty low, around 3.9% of the float. That doesn't indicate a major bearish conviction building up. And the short ratio is tiny, 0.16 days to cover, meaning if shorts wanted out, they could cover their positions very quickly without squeezing the price much. No signs of a major short squeeze setup either.
Okay, technically, moving averages.
Yeah, technically strong.
Yeah.
With the stock at $55.09, it's trading well above both its 50-day moving average, which is in the $45-$49 range, and its 200-day moving average, which was climbing rapidly but still below $49. Clear signs of strong positive momentum and established uptrend on the charts.
So positive analyst views focused on assets, strong recent news flow, ARK buying, low short interest, and positive technicals. Market sentiment looks pretty bullish overall.
Definitely looks that way. Okay, let's shift to Chapter 5, Ownership Structure. Who actually owns BMNR? It's interesting. You have to distinguish between the premier backers they trumpet in press releases and the holders you see in standard 13F filings. The premier backers include strategic, often crypto-native or tech-focused names. ARK's Kathy Wood, MOZAYIX, listed with 9.99% ownership. Peter Thiel's Founders Fund, 9.10%. Bill Miller III, Pantera Capital, Kraken, DCG, Galaxy Digital. These folks likely came in through direct placement strategic deals.
Right, the early high-conviction money. What about the more traditional institutions?
That's the revealing part. If you look at the 13F filings from typical hedge funds, guys like Scientech Research or Schoenfeld Strategic Advisors, they hold relatively small positions. In fact, all the 13F filers combined hold less than 1% of the company's shares. That tells you something significant. Broad, traditional institutional capital hasn't really piled in yet. It's still mostly these strategic players in retail.
That makes sense. And the high concentration among those strategic backers and insiders, MOZAYYX, Founders Fund, insiders controlling maybe a quarter of the company combined, that points to a unified vision, likely, but also concentrates control significantly. Something to keep in mind.
Absolutely. And speaking of insiders, what have they been doing? Buying or selling? Overwhelmingly buying. Over the last 12 months leading up to our date, insiders bought nearly 1 million shares, 959,075 on the open market, and sold. Zero. None. Chairman Thomas Jong Lee himself has been a major buyer. One notable purchase in July 2025 was for 444,444 shares, worth about $2 million at the time. Other execs have also boosted their stakes through compensation plans. Total insider ownership is around 5.97%. That's strong alignment. They clearly believe in the strategy.
Very strong signal when insiders are buying significantly and selling nothing, especially the chairman leading the charge. Skin in the game.
No doubt. Okay, let's talk risk. Every investment has it. Time for Chapter 6, Risk Assessment. We'll use a SWOT framework. Strength, weaknesses, opportunities, threats. Let's start with strengths. What are BMNR's core internal advantages? We've hit these already, but market leadership and scale, biggest ETH treasury. That 2.151 million ETH number is huge. Visionary leadership and narrative control via Tom Lee. Exceptional stock liquidity that $2 billion daily volume makes raising capital efficient. And backing from Premier, validating investors.
Okay, sounds powerful. Now the flip side. Weaknesses. What are the internal limitations or vulnerabilities? The biggest glaring one is single asset dependency. Their value is almost entirely hitched to the price of one highly volatile asset, Ethereum. That's massive concentration risk.
Right. And tied to that is the inherent model reflexivity we keep mentioning. It magnifies gains on the way up, but it can brutally magnify losses and create a death spiral on the way down. It's fundamentally fragile in downturns.
Other weaknesses.
Well, the legacy business is still technically there, and it's unprofitable. It's small, but it's a drag. And the business model requires continuous shareholder dilution to grow the ETH stash. While they aim for accretive dilution, it's still dilution.
Got it. Dependency, reflexivity, legacy drag, dilution potential. Now, opportunities. What external factors could really propel BMNR forward?
The absolute core opportunity is the Ethereum Supercycle thesis itself, this idea that Wall Street adoption, AI integration, and blockchain technology are converging to create a new digital economy with ETH at its center. If that plays out, BMNR is positioned as a primary vehicle.
So, betting on the macro theme. What else?
Continued regulatory clarity. As the U.S. sorts out rules for digital assets, especially if ETH gets a clear non-security status and institutional guardrails are built, it de-risks the asset class and could unlock huge investment flows.
The potential for staking yield. If BMNR successfully stakes its massive ETH holdings, that could generate substantial recurring revenue in ETH, adding a whole new dimension to the valuation.
And simple market mechanics. Potential inclusion in thematic ETFs focused on crypto or digital assets. That creates forced structural buying demand for BMNR stock.
Okay, big potential upside. But there must be significant threats too. What external challenges keep you up at night if you hold BMNR?
The most obvious and existential threat is a general cryptocurrency market collapse. If ETH crashes hard, BMNR's NAV plummets, the reflexive model kicks into reverse, and the stock price gets annihilated. Simple as that.
Right, systemic crypto risk. What else?
An adverse regulatory shift. Imagine the SEC reverses course and declares ETH a security in the U.S. That would throw the entire model into chaos, potentially making it much harder or impossible for BMNR to operate as planned. Huge threat.
Competition.
Yeah, competition from new ETH treasury companies that might emerge, maybe with different strategies or lower fees, could erode BMNR's dominance over time.
And the underlying technology itself.
That's the ultimate long-term threat. Technological obsolescence of the Ethereum network. If some new blockchain comes along that completely surpasses Ethereum, making it irrelevant, well, that destroys the value of BMNR's core asset. Less likely in the near term, maybe, but always a possibility in tech.
It really highlights how this isn't a diversified play. It's a highly concentrated bet on ETH's future success and dominance.
Exactly. And we can't forget broader macroeconomic factors. Things like inflation and interest rates. Higher rates generally suck liquidity out of speculative assets like crypto, increasing the opportunity cost of holding them. That's a headwind. Low rates are a tailwind.
And even geopolitical factors can ripple through. You mentioned the U.S. imposed tariffs of 2025 in the notes. How does that connect?
Indirectly. Things like major tariffs or geopolitical crises can trigger global risk-off sentiment. Investors flee from assets perceived as risky, and crypto is definitely high on that list. So even if tariffs don't directly touch BMNR, the resulting market fear could slam ETH prices and hit BMNR's NAV hard.
Right, it's all interconnected in global markets. Risk aversion anywhere can hurt risk assets everywhere.
Okay, we've covered a lot of ground. Let's try to pull it all together. Chapter 7. Conclusion. So let's synthesize what we found. First, the bull case for BMNR. What's the argument for investing?
It's essentially a direct, potentially leveraged way to bet on that Ethereum supercycle idea. It offers right now the biggest, most liquid, and arguably most institutionally friendly stock market vehicle to get ETH exposure. It's led by Tom Lee, who has credibility. It's backed by big-name savvy investors. They've proven they can raise capital and buy ETH at an incredible scale. You've got strong insider buying showing alignment, and the regulatory environment seems to be moving slowly in a favorable direction. And the kicker, as we calculated, the stock appears to be trading at a noticeable discount to the actual market value of the assets it holds. Okay, that's the bull case. Compelling if you believe in ETH. Now, the bear case. Why might you stay away? The risks are just as concentrated as the opportunities. Extreme concentration risk, it's almost purely an ETH bet, and ETH is incredibly volatile. That reflexive model makes it inherently fragile in bear markets. It can unwind very quickly and painfully.
The moonshot strategy, while small, adds complexity and execution risk in a different area. The valuation, while seemingly discounted to NAV now, is ultimately tied to the crypto market sentiment swings.
And any major external shock, a crypto market crash, a harsh regulatory crackdown, a fundamental flaw discovered in Ethereum could be absolutely devastating, potentially wiping out huge value.
So to summarize the valuation again, traditional metrics, PE, DCF, they just don't fit. You have to use the net asset value model looking at the balance sheet. Our estimate puts that intrinsic value around $10.77 billion, which translates to $62.05 per share based on the data from mid-September 2025.
Okay, value is around $62 a share.
And for our concluding outlook, on September 15th, 2025, BMNR closed at $55.09 per share. Comparing the market price, $55.09, to our estimated NAV, $62.05, that represents roughly an 11% discount. The stock was trading for about 11% less than the market value of the assets it held.
An 11% discount. That's the crux of it, isn't it?
Exactly. So here's the provocative thought for you, the listener, to mull over. Does that 11% discount represent a compelling bargain? A chance to buy a massive portfolio of digital assets, primarily ETH, for significantly less than its current market price? Or is that 11% discount simply a justified risk premium? Is the market correctly pricing in the extreme volatility, the single asset concentration, and that potentially dangerous reflexivity built into Bitmine strategy? Your answer really depends entirely on your personal conviction. How strongly do you believe in the future of Ethereum? And how much faith do you have in Tom Lee and his team to navigate the incredibly choppy waters ahead? That's the judgment call. Phew. Okay, we've unpacked the unique business model, the key leadership, those unusual financials, the market sentiment, the ownership picture, and significant risks and opportunities around Bitmine Immersion Technologies. What stood out most to you from this deep dive? Would love to hear your thoughts. Let us know down in the comments. And thank you for joining us today. If you found this useful, please remember to like and subscribe to the Stock Analytics AI channel.
Our members, $4.99 a month, get priority access to these deep dives, and we're tackling all the S&P 500 stocks soon. You can also request a specific stock deep dive with a super thanks. Just a reminder, this analysis was generated by an AI system. It's for educational purposes only and should definitely not be taken as financial advice. Always do your own research or talk to a qualified financial advisor before making any investment decisions. We hope you'll join us for another deep dive soon.